Hello everybody. So today I want to cover two stocks that have a main rival, and I kind of feel bad covering these stocks because they are darlings of retail investors. Really, retail investors love AMD, love PayPal, and so take everything I say with a grain of salt. A natural conclusion, if you don't want to watch the whole video, is that AMD and PayPal are value plays, and I'm not equipped to analyze value plays, and value plays don't fit really well with my framework. And so let's go ahead and just talk about this. Should you invest in number twos whenever you have two stocks in an industry with a clear rival, or should you just stick with the best? And that's the point of this video. And if you look at this, of course, both AMD and PayPal reported decent earnings, but the earnings disappointed the street, such that both stocks are down, roughly 10%, a little more than PayPal, 13%. And one other way to look at this is over the long run. Over the long run, is there a stark difference between being number one and being number two? And unfortunately, I would put AMD and PayPal as number two within their respective industries. So if you look at AMD versus Nvidia, you can see that Nvidia, across a 5-year period, almost 80% average annual return every year for 5 years for Nvidia versus 18% for AMD. So AMD, you haven't broken the Nasdaq. The Nasdaq has done better than AMD, and of course there is Nvidia in the Nasdaq. And if I do PayPal versus Square, it's a similar story, with Square at almost 23% over a 9-year period this time versus PayPal almost 11% over a 9-year period. So again, Square here also nicely beats the Nasdaq, although not as well as Nvidia, but PayPal does not. In fact, at 10.6, it doesn't even beat the S&P 500. And so if you just look at the long-term returns, number ones clearly outperform number two. So let's go ahead. I'm just going to go through the earnings really quickly because you now know the conclusion of my video, which I prefer to invest in the best in an industry. So let's begin with AMD. AMD reported nice revenue growth at 24% year over year. For most value investor, that sounds excellent. For me and the stocks I cover on this channel, that's on the lower end of the growth stocks I cover on the channel. The gross margin is up at 54%, so that's a nice thing to see. But when you look at the growth a little deeper and when you decompose the growth, you notice that the segments that are doing well for Nvidia, which is a data center segment, is also the fastest growing segment for AMD, with really nice 69% year over year, but Nvidia grew much more than that over the same period. Their client segment, which is the laptops and the like, is also doing pretty well with their processor. They're doing well with processor. They're stealing from Intel. They're taking away a lot of business from Intel. That's what I mean by stealing. They're taking away business from Intel. It's up 58%. That's also pretty nice, but the gaming segment's not doing well. It's down 59%. Now, the gaming segment, it's a cyclical industry. This is not an upcycle right now, and so I understand why this is down, although this is a stark downside right there. And then what I find very disappointing is the embedded segment. The embedded segment is down 13%. Didn't we pay a fortune for Xilinx in order to grow the embedded segment? Yeah, that was the case in February 2022. $35 billion was paid for Xilinx, and it's now a declining division. Of course, many of the elements of Xilinx helped the entire business and created synergies around the entire business, but still it's very disappointing to see the embedded segment going down. So we have two segments that are down, two segments that are up. So again, it's mixed. It's mixed in my view, and that's why you get to 24% growth year over year. If I compare this to Nvidia, 1 quarter lag, because we don't have Q4 for Nvidia yet. They haven't reported yet. But so you'll allow me this, and I'll just lag it by 1 quarter, and you'll understand my point. The trailing 12 month for Nvidia was plus 152%. past 12 months, 1 quarter lagged, versus plus 24% past 12 months for AMD without a quarter lagged. And so there's a clear lag, there's a clear difference in the growth of these two companies. And if you look at the forward growth, I've updated my spreadsheet based on everything I read. The market is expecting Nvidia to grow revenue 93% across the next 12 months versus only 11% for AMD. Now, they may beat that, they may get into the teens, but that doesn't really help with either my enterprise value over gross profit over revenue growth number or my rule of 40 number. My EV over GP over RG looks cheap, quite frankly, for Nvidia. And if you follow my channel, you know I've called Nvidia cheap for a while. At a 0.36, it's not the cheapest out there, but it's not really that expensive. Nvidia, on the other hand, looks kind of trading in line with the market at a 1.23. They don't even achieve a rule of 40, 29, like kind of your average stock in the market doesn't beat the rule of 40. Nvidia handsomely beats the rule of 40 by a crazy amount, and they have an EV over GP over RG being cheap. And so I tend to concur with a lot of analyses out there that are thinking a $5 trillion company, Nvidia, is possible, which is crazy to think, it's crazy to say. That's why this is not financial advice. But on a very cursory analysis, I would stick with Nvidia, and I'm still not overselling my Nvidia shares. Give it another 6 months, maybe I'll jump back in Nvidia. I'm pissed because I sold Nvidia much lower, and I thought I was real smart. I thought I was making a profit. That turned out to be a mistake, selling a winner like Nvidia. And they look cheap in my spreadsheet. They look cheap at 118 right now. So I like it at 118. Let me move on. Let me talk about PayPal. PayPal is a similar story. PayPal has one main competitor, at least in the US. If you look at PayPal from abroad, you may not recognize that. But if you look at it to the US, Venmo competes against who? Cash App, right? Cash App is now more popular than Venmo. And their small and medium-sized business segment competes against who again? Square, the Square payment terminals, huge competition in that domain. So for two of these segments, you're competing against Square, which is kind of a leader in that space. And sure, PayPal does better internationally. Sure, they do well at checkout, and they have many things going for them, and they have staying power. I'm not denying that. But it seems to me like PayPal right now is mostly a buyback story, because they've announced another $15 billion stock buyback program. To me, PayPal looks a lot like a stagnant business, not much exciting, not much growth, but you're generating cash flow and you're buying back the stock, buying back the shares. But if you look at the growth in active accounts, for example, year over year, plus 2% only. Monthly active accounts growth, plus 2%. Payment transactions year over year, down 3%, right? So okay, and the transaction per active account down 4%. Anyways, it's like all single digit, when inflation is, in my view, double digits. I always say 15% money supply. There's 15% more money supply. You should be catching your fair share of money supply. I'm not sure PayPal is doing that. That's why PayPal looks like a value stock. Perhaps a great value stock, no financial advice, but it doesn't really fit well in my framework as a growth stock. And when I compare PayPal, the valuation of PayPal against other stocks in the industry, don't mind the stock price here. It got it wrong because Square changed its ticker to XYZ. That's the reason. The market cap is good here. The enterprise value is good here. If I look at my numbers, enterprise value over gross profit over revenue growth for Square, I get a 0.41. And I don't get a rule of 40 for Square, and I don't own Square, by the way. The stock that I own in this is Shift 4. Okay, and then as far as PayPal goes, PayPal the same, doesn't achieve a rule of 40. They have a very, very similar rule of 40 at 26, 23. Again, you're kind of in line with market here, but PayPal, because and the analyst I find generous, predicting 7% growth next 12 months, but PayPal is more than twice as expensive as Square on a growth-adjusted basis. On a how much am I paying for that growth basis? Square looks cheap here at a 0.41. Of course, in the payment space, there's even cheaper than Square, but Square has the leading digital wallet in the US, which is Cash App, and they are one of the leading payment system for small businesses. And so that's why these valuations At least Square, in my view, looks better than PayPal. So again, the number one in the space, in my view, seems to be looking better from the number two in the space. But that's because I judge companies, as growth stocks. So in conclusion, this is not to say that AMD or PayPal are not going to do well. They may do really well, but they look much more like value plays to me than they do growth stocks. And as a growth stock investor, I have to stay true to myself, and I have to stick to number ones when I analyze and assess stocks, and always go back to the total returns and look and see what you think. Anyways, this was not financial advice, not investment advice. This is just entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.